Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another live stream. Happy Tuesday to you. I hope everyone is having a nice day, and we are kicking off a start to what is a pretty important week in terms of jobs data. So this week we have the big NFP report, which is, by the way, not actually certain to happen due to some of the potential government shutdown stuff. You have to understand that the BLS basically, I mean, it's a government entity. So if there's a shutdown, there's potential that there's a delay on NFP data. So be careful with that. We don't know exactly how all that will play out. Historically speaking, if you're talking about government shutdowns, what does that tend to do to markets? It tends to cause very short-term panic, but nothing of substantial meaning. I know there are some instances where you did get delayed shutdowns that did cause, 5+% pullbacks in the markets. But I'm not really going to make some sort of big decision or prediction that I think markets are going to drop big time because of that. So be careful with that. But yeah, it is something to keep an eye on. So S&P 500, of course, very close to all-time highs, bouncing nicely last week off of these lows and pushing up from there. Basically, what we can see here is across S&P 500, NASDAQ as well, Dow Jones, pretty much unchanged and seemingly awaiting some of this data here. It's big this week because, the jobs market has been holding up okay, but it's definitely shown signs of weakening. JOLTS job openings, which is a big one, right? We have that coming out today. JOLTS job openings will impact scoring within our system. The Edge Finder will keep an eye on how that comes in, but we are getting that today at 10 a.m. That's in about 1 hour from now. We're expecting 7.19 million job openings here in the U.S. We'll see if that hits expectations or misses it. But what that tells us about the jobs market could give us an indication as to how strong or weak it is overall, right? So JOLTS job openings, we have ADP on Wednesday, we have unemployment claims on Thursday, and then we have the non-farm payroll pending if the government doesn't shut down on Friday. So kind of a strange concept to think about, but yes, it is possible that if the U.S. shutdown does take place, if there is a delay on things, possible that the NFP report gets delayed as well. But we'll see. Hey, Vanessa, good to see you. Gold is safe. Is gold long safe? There's no such thing as safe. Everything in markets is risk. There's no such thing like gold long here. Sure, could it work out? Maybe. But again, if it doesn't work out, it's all about your position sizing, your probabilities, and how you're going to manage a risk if you're wrong. Understand a really simple concept. There's no such thing as a safe or certain bet in financial markets in terms of being an active trader. If you want safe without much of a guarantee of returns, the biggest way to do that would be to buy the S&P 500 and not look at the markets for 10, 15 years. That's probably the safest thing you can do. But even then, it's not safe. I guess you could go even safer and say, I just want to buy government bonds and just wait for 10 years and get a very small return. Show the retail sentiment on the Edge Finder. Yeah, there's a delay in the mornings as the data resets. So we have an automation behind the scenes that does retail sentiment. So no worries on that. It will be updated soon. Every single day we have a little bit of a reset that takes place. So on the Edge Finder, we have just a huge list of automations going all the time, updating, pulling data, etc. So retail sentiment looks like it just updated a few minutes ago. So yeah. See, it says right here, script is interrupted every morning, returning at 10. And I believe that is in a different time zone than mine. But yes, it's completely normal. There's a lot of automations behind this baby. Also, I want to show you guys something. Check this out. US economic heat map, kind of cool little thing I was playing around with yesterday. So if we take a look here at the US economic heat map, I added some stuff, I changed some stuff around. We're looking at the US economic heat map. And what we can see here is that I added this section down here. So if you are somebody who likes economic data, and that's what you use the Edge Finder predominantly for, which by the way, that's what I use the Edge Finder mostly for. It's the biggest component I like. I like the sentiment stuff, of course, too, but the macro stuff is where I think we really have something extra special. So if I look at the macro score here at the bottom, what's kind of cool is we've added this little section where just based on US economic data, what does this suggest for S&P 500, US oil, silver, and for gold? So it's a macro only scoring. And what I found kind of interesting, now this doesn't take into account price action, it doesn't take into account sentiment, retail positioning, it doesn't take into account commitment of traders data, right? The thing is, this is only looking at the macro. And when we look at the macro, what's interesting is S&P 500 has a slightly positive score, but silver and gold actually have a negative one. Why is that? Well, it actually kind of makes sense. If you think about it, there's been some shifting data points in the US economic heat map. We're going to get more of that here today with the JOLTS job openings. If JOLTS job openings, for example, comes in better than expected, that could weaken the story for gold even further. Remember that strong jobs data would be bearish for gold. Weak jobs data would be bullish for gold. Because remember, gold typically trades, not always, but most of the time, inverse to the dollar and definitely inverse to the economy. So if economies of the world are weakening, typically that is a positive thing for gold. And when the economies of the world are strengthening, typically that is a weakening factor for gold. So when we look at things like JOLTS job openings, ADP, and non-farm payroll, the things that we get here this week, as well as jobless claims, we'll get an insight into the jobs market. But why is gold getting a overall -3 score? Well, for just the macro, not looking at anything else. Well, GDP numbers were really strong. Services PMIs have been strong. Retail sales numbers were stronger than expected. You also had jobless claims, which were good last week. The producer price index, this was actually bullish for gold. Lower inflation means more rate cuts. That's bullish for gold. So inflation sort of mixed, right? Because 2.9% for CPI, that came in line with expectations. So inflation's kind of a mix for gold, but growth is looking really good. And our jobs data, yes, bad NFP last month, but let's watch it this month. So I actually think, here's my opinion on gold. My honest opinion is I actually think it's due for a pullback. But let me be very careful with saying that. What I mean rather by that is, will I short this market? Absolutely not. That has been the famous last words of so many traders this year, trying to short gold, trying to bet on the top. However, the macro is something I really pay close attention to. And we've had some pretty good strengthening factors where I think that the gold market has room to pull back. I think that there's a possibility that if you get some strong jobs data points this week, that the dollar will actually rally. And if that takes place, if we do see, I'm actually long the dollar this morning. I went long dollar yen. I think there's room for the dollar to continue to squeeze higher and to start making a bigger move. Does that mean that I'm just bearish gold and silver and I think that I have a huge, edge in going short? No, I am not shorting gold. I'm not shorting silver. I just think that they are a little overdone to the upside. I'm not shorting them. Again, I want to clarify that. I'm not saying overdone as in they're overbought and I'm selling because it's going to come down, but rather I just don't love the risk reward to getting long up here. If the market drops here for gold, if we see a pullback and the macro score starts to look favorable for gold again, I'm going to get long. I don't like to short gold and silver almost ever. It's very, very rare where that situation makes sense to me. But yeah. What's the government shutdown? I would just Google that because I'm not going to get into all of that today. But basically, it's a delay on government spending because they have a debt ceiling and all this conversation, and they have to debate and argue, and it can cause delays in things like government-funded activities like the BLS, which puts out the NFP report, right? So yeah. So anyways, with gold and silver, what we can see here is when we just look at the macro, just the macro, this is not looking at institutional activity, which is super bullish for gold and silver. When we just look at the macro, it looks like we have sort of a less attractive environment for gold and silver at this time. So again, I think that gold and silver, they're rock stars. I think they'll continue to move up in the coming years, but I do think we're due for a pullback. And so we'll see. So what trades will I be placing on gold and silver? None. No shorts, no longs. Just going to watch and wait. If it pulls back and then we get some good macro, then I'll probably get long. VIX is up here a little bit this morning. S&P 500 is also, it's flat today. Not really seeing any motion here. S&P is, we've had an improvement in terms of the S&P 500 scoring here within the macro score. Again, some growth metrics looking good. GDP still remains strong, which is good for corporate earnings. Inflation at 2.9%. Not ideal. We'll get some latest data on that next month, of course. But I think this week really for the jobs market, that's going to get the attention of markets the most. So we'll see how that plays out. But as it stands, S&P 500, oil, they're getting higher scores. Silver and gold getting more negative scores when looking at just the economic data. And I need to clarify that because if I go take a look at, the top setups page, and let's just add everything in here and let's just add indices for a second. So here's what you can see, right? So economic data, so Dow and NASDAQ are getting bullish readings, but it's mostly from other factors like sentiment like Dow Jones. I think there was a lot of institutional buying that went on. NASDAQ, same thing. And then economic data is just a +2. So it's positive, but it's not like screamingly positive. Should the labor data come out strong, how will that affect the further rate cut story? So here's my thought on, well, this is just straight up likely what would happen, is if you get a really strong jobs print, yields will rise, which is the best way to track what the Fed is going to do, is to just look at the 2-year yield. So if I'm looking at the 2-year yield, if you get strong jobs data, yields will rise. Yields rising would probably put pressure on gold. And in the short run, it would probably put pressure on stocks as well. Though in my opinion, I'm a fan of kind of focusing more on growth in the economy rather than begging for rate cuts. So if we get strong jobs numbers, I'm actually going to hope for actually that you do get a market sell-off or a pullback. Because to me, strong jobs numbers, that would be a reason to look to go long stocks on pullbacks. I'm also long the dollar. So I mentioned this morning, I went long dollar yen. If we just go, let's go major currency pairs. So dollar yen is getting a really nice score within the Edge Finder. It's getting a +7 score. When looking at sentiment, we have a flat reading. Technical looks positive though, and economic data looks pretty positive as well. So I have confirmation. I went long dollar yen this morning. I'll pull up the chart here. So I went long dollar yen just shortly before stream. Hitting into some support area. I'd like to see a pretty quick, move higher from here. I'm looking for a move back up to this 150 area or so. And I do think you have upside there. So I like dollar yen to the upside. I also like dollar CAD if we do get a pullback to like 1.3850. I like that area. Those are probably my top 2 dollar setups right now. You do also have euro dollar getting a pretty bearish score, but I don't love the chart for euro dollar. So if I pull up euro USD, yeah, see, I think if I wanted to get short euro dollar, I'd like to see like another leg lower just to kind of really show that bears are strong here. I drew this trend line yesterday, but I think you kind of still have this upward trend going on. I'd like to see some failure here from the from the bulls, and then I'll watch it closer. Is Forex James on today? Bala, you know where you can check the schedule, my man. A1trading.com. You can check the live stream schedule. I don't coordinate these shows. I just look pretty on these shows. Okay, someone else coordinates them. What's your take on Ethereum? Yeah, crypto has been interesting. It's actually been lagging the market a little bit, right? So Ethereum's had a little bit of a pullback here. My gosh, these things are so volatile. Look at that. It's a 23% pullback. Yeah, we'll see. I mean, for me, if I look at, if I am looking at indices, crypto, like Bitcoin's just getting a neutral reading. We don't have currently Edge Finder for Ethereum, but I'd like to add that eventually. That is on the to-do list. We have a long to-do list of things to build, but Ethereum would be a cool thing to add. -1 score overall. Sentiment sort of mixed. Technicals look negative, which I agree with. Economic data not particularly favorable to risk on assets like a Bitcoin or an Ethereum. Edgefinder has crypto programmed essentially like it does most risk on assets. So Bitcoin kind of falls in a similar category to stocks in the Edgefinder's scoring system. What's up, Cameron? Thank you very much for the donation, my friend. Morning, Nick. Any thoughts on AUD USD? Yes. So if I am looking at the Australian dollar, and I'm just going to do this major currency pairs. So AU is going to be a bearish reading for me, actually. Sentiment getting a negative read. That's going to be looking at things like your commitment of traders data, see what institutions are doing. Technical read, I think you flipped a little bit of your momentum to the downside, and economic data just slightly favors the US dollar over the Australian dollar. So in its entirety, is it a really strong bearish score? Not really. -5 or +5 is kind of like, it's leaning one way, but it's not super, super bearish or super bullish. So if I take a look at the chart, though, I'll tell you this. Let me finish with Ethereum. So Ethereum, what I see here happening is you've had a little bit of a breakdown in this momentum. So if you're watching Ethereum, here's my thoughts on this one. You may be seeing, I don't have enough conviction to get short, but this looks like a pretty good technical short, right? So you're coming into this 38.2, this 50% retracement, this level looking left. Would not be surprised if you got a little bit of rollover and continuation to the downside. I think stocks also could have a little bit of room to pull back, especially if NFP comes in soft. Be careful with that. So yeah, I mean, to me, not a short I take because I don't have the confirmation within the system. Bitcoin and Ethereum would get the same score, even if Ethereum is on the list. It's going to most likely get a very similar score to Bitcoin within the Edgefinder's scoring system. So yeah, my thoughts on Ethereum. Technicals look bearish. Everything else kind of looks mixed. If you like it for the longer term, I also think the game with crypto is to wait for people to hate it before you buy it if you're like a long term. So I'm not really like a long-term buyer of Ethereum at these levels. Look, if crypto drops, I've done this over the years, bought a little crypto when it went down a bunch and then just stow it away. Like I think that's the play on crypto, and just accept that that could go to absolutely zero, right? That's the way I trade or invest crypto. Like trading crypto is very different than investing crypto. If I'm going to invest in crypto, I want it to be so hated and so like, oh, that's yesterday's news. That's where I like to invest. Sentiment is a huge thing in crypto. If you want to, this is my opinion, not financial advice. If I want to invest in crypto, I'm waiting for people to hate it. And you might not get that for a while. Like we could see Ethereum rocket to 6,000 and it is what it is, right? But if you get a major slide, did you talk about oil yet? Not yet. Coming to it, Justin. Don't you worry about that one. That's my point with crypto. Like if you want to own crypto for the long term, in my opinion, it's all about when you buy it. You don't buy it when everybody loves it. You buy it when everybody hates it. And easier said than done, right? Because when everybody hates it, you're like, gosh, this is such a loser to be buying this thing. Like this thing, you know, you get into a quote unquote crypto winter. It can be a tough thing to hold through. So I totally, but again, that's where all the reward is, where you take the risk when nobody wants it. Granted, there's always risk in crypto. Crypto, you could buy it thinking you're getting a good discount and see it go down 90% further. So super risky, like not a place to park money and you know, sleep soundly at night. It is a high risk, high reward place to trade or invest. Even with trading, like you could be trading Bitcoin or Ethereum and have like a massive drop all of a sudden on that thing. And it could blow through your stop loss, like meaning you could have a stop loss on a CFD brokerage or something with Ethereum or Bitcoin and wake up one day and realize you got so slipped, like your slippage was awful because crypto can move so quickly and so volatilely. I don't know if that's a word. All right, so the Australian dollar versus the US dollar. I mentioned I would do this one for our friend Cameron, who donated $2 to the stream. Thank you very much. Coffee is on you today, my friend. Thanks. So AU is getting a bearish reading within the Edge Finder. Main reasoning, sentiment, and I'll do a breakdown on this one because I think it's a good thing to kind of break this down further. So if I'm looking at the Australian dollar versus the US dollar, I know it's a little harder to see because this gets smaller, especially if you're on a mobile device. If I go major currency pairs and I want to look at the Australian dollar versus the US dollar reading, let's go line by line really quick. COT data is where we're costing on the sentiment side. So sentiment wise, retail positioning is mixed, but COT data, institutions seem to be selling Aussie, buying dollar. Seasonality, the month of September, which by the way is ending. So granted, this could change a little bit tomorrow or 2 days from now. Seasonality, negative for, whoops, I'm looking at the wrong line. But same thing for Kiwi and for Australian dollar. We're getting a -1 score. Trend has flipped a little bit of its momentum to the upside to now a little bit bearish. GDP is a wash between the two currencies. Manufacturing PMIs is a wash. Services PMIs favor the US, right? Weak for Australia and strong for US. I know US had strong services PMIs. We're breaking this down because again, this is thinking, right? This is the procedure that goes into why the currency pair is getting a bearish reading. Retail sales is a wash between the two currencies. CPI favors USD, PPI favors Australia heavily, right? So US PPI, we know this just off the top of my head. PPI was really soft for US. That's going to be soft for the US dollar, and the Australian dollar stronger than expectations. So then we have a wash on the remaining categories: interest rates, labor data, PCE, etc. Final consensus, Edge Finder goes through all this data automatically, so you don't have to, and says -5 bearish reading. However, this does not mean, okay, logical conclusion, now I go short, right? That's not what the Edge Finder does. That is the synopsis that the Edge Finder has interpreted. Then I go look at the chart and I say, do I like this chart for a possible short trade? And the answer is not really. In fact, I think that if you were to get a short trade, like if the shorts were going to work out here, I would have expected it to hold this area, and maybe it still does. Maybe you get kind of like by end of day, like if you get this candle, like let's say today's price action completely reverses, then maybe that's a short. Like maybe we have more downside for the Australian dollar. But to me right now, this is going to look a little too choppy, too mixed, right? Because you came down here, swooped these lows, found some support in this area. So yeah, I don't love the idea of a short trade here, but I also don't love the idea of a long trade. So I would wait for candle to look with more confirmation one way or the other, right? So if we had a strong reversal here today, that could potentially signal that we are going back down to test these lows, in my opinion. But yeah, not a chart I particularly love. If I'm trading the dollar, I mentioned this morning, I took a trade. We'll see if I'm right. We'll see if I'm wrong. I took a trade long dollar yen right before stream. So we're up a little bit. I mean, trade hasn't moved very much, but I'm looking for a reversal higher here in dollar yen. I like this one in terms of dollar trades. I like dollar yen and dollar CAD the most. Dollar CAD is actually my favorite dollar cross to the upside. I really like this trade, and this will be probably my next attempt on dollar longs, is if you do get some downside in dollar CAD this week, a 50% retracement or a 38.2% retracement starts to look really attractive in my view for a further continuation to the upside. So if we get this kind of move, I am looking for longs on dollar CAD on a pullback here. I also know that Marco from the A1 trading team, he's also watching or I think he's already in dollar CAD longs as well. He's done really well with this. So if dollar CAD comes back and tags me in, then great. I can look for some longs in this area. But if it doesn't, then congrats to Marco, who I think, like I said, I believe he's already long. Yeah, so currencies are busy for me right now. There's a lot of stuff happening. The dollar bullish train to me is leaving the station. I think you have room for dollar upside. We'll see if I'm right. If I'm wrong, so be it. The thing is, I reiterate this frequently on my channel. Good trading is not about being right all the time. Trust me when I say that. Like, I'm wrong pretty often. Good trading is about managing a trade when it works in your favor or when it moves against you. And what the most common mistakes that traders make, the number one biggest mistake ever that traders make, is the position sizing being inappropriate, meaning they have big trades, and when something goes wrong, it destroys their account. You can't be in this game for the long term. If you see yourself trading 5-10 years from now, you better drop that position size, because I'm telling you what, stuff happens and markets go crazy, and all of a sudden you're blindsided by something, you're totally wrong about something, you get it wrong one time, and if you have position sizing that is inappropriate, it's going to wipe you out. If you have position sizing that is small and defensive, you can survive a lot that the market will throw at you. That's the name of the game. I've been doing this since 2018 live on YouTube. I have been wrong so many times in front of people. It's just like, you start to realize good trading, like, new traders think being right is what makes a good trader. Experienced traders know it's not about being right all the time. Your win rate is actually kind of irrelevant. If you have a low win rate, you can still make a lot of money in the markets. It's about what you do with a winning trade, what you do with a losing trade, what you do with your position sizing. Those are variables that are way more important. How you exit trades, how you manage your risk, how you manage your position sizing. Those are the things that make a profitable trader. It's not me telling you, oh, I know what gold's going to do tomorrow. That's newbie stuff. Newbies think like, oh, a great trader can tell me where gold is going to go tomorrow. That is what beginners believe in their head. But I'm telling you, if you want to jump the line and skip to the part where you actually make money in markets, forget the idea of getting it right all the time, and rather build a system that over thousands of iterations will make more than it loses. That's what a profitable system. It's like a machine, a machine that has losses, has wins, and net makes money. How do you build that? You just get really good at back testing systems. And in my opinion, I built my system around macro. Fundamentals played a huge role in building that consistency. I found it actually, and just a quick mini rant on this. I found it pretty exhausting when you start to realize, like, almost everyone in the trading space, like retail trading world, is all about technical analysis and charts and stuff, and that's great. But what I found is that there was way more potential in building a system surrounding the macro, like what's happening in markets, because you can study. Like, people ask me sometimes, how do you back test fundamentals? Well, you do historical studies. You look at times where inflation was high and jobs growth was slow, and you say, what does that typically bode for gold and currencies and the dollar and stocks? What does that typically do, and how do you study that? That's a lot of research. It's a lot of time and effort. Real quick, what's the greatest way to get started learning fundamentals and fundamental analysis for free? It's a simple answer. Join the free A1 Trading Telegram channel. There's a link right below me, this QR code. If you're watching on a TV or a desktop or whatever, scan the QR code to join our Telegram. Every day, our research team is putting up analysis on what's happening in markets and what fundamentally is driving prices. If you want to learn for free, you don't have to pay a dime. We are putting out some really, really valuable content. I'm telling you, I read this stuff myself because I've hired someone to full-time, or not full-time, but dedicate significant amounts of time to building a newsletter here, essentially, that keeps you up to date with what's going on. We also post bonus charts like $CAD from Marco yesterday. So again, to me, our goal with the Telegram channel this year was to create the highest quality, most valuable free newsletter that you could find for traders looking to learn macro, technicals, etc. Take 2 seconds. We'll drop the link here also in the chat if you prefer to get access this way. We'll drop the link there for you, or you can just scan the QR code. There it is. Join the free Telegram. Again, highly, highly recommended. Purely technicals? No, fundamentals. Someone asked me about oil earlier. Yeah, I'm back to neutral on oil. Price completely failed out. I went long. Here price moved in my favor and then completely reversed, and I took a small loss. And I'm glad that I did, because the price completely fell apart from there. So I'll keep an eye on oil, but my idea, my breakout attempt looked good, and then we failed. So I took a small loss, and I'm back to neutral, because my idea was based on macro starting to look a little better, technicals breaking out, and then when the technicals fell apart, just going to pass on the trade for now. So I'll keep an eye on it. Anyways, guys, up next, we have Marco sharing his trade ideas. So stay tuned. Don't go anywhere. He's got some more coming at you. Yesterday, I mentioned his dollar CAD trade. I think he's on the same boat where dollar may be showing a little bit of signs of strength here. We'll see if what his thoughts are. Stay tuned. He's coming up just after this. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I hope everyone is doing well. What has been happening in the markets? Well, my Aussie CAD trade is ripping higher. So really nice daily candle on Aussie CAD. USD CAD also in some nice profit, pretty close to the profit target. I did move my stop loss on this one. So just a quick update if you're following this trade, if you're in the A1 Discord, I moved it to, I believe it is at 1.38. So I think that's my new stop loss level. I would have to check in my MetaTrader. And also EuroCAD is right around break even. So these are the 3 setups that I am in. A quick scan of the daily candles on the NASDAQ gold and silver. Well, kind of a red day, possibly pulling back a little bit as far as I can see. So I am waiting if they can pull back a bit more and if I can get in on some nice buy setups. So these are my main 6 instruments. I can even rename this to Watchlist, so it's a bit more simple. Yeah, I have 6 things on the watch list. And so on the NASDAQ, I'm looking at 2400 level to buy. On gold, I'm looking at maybe 3630 to buy. So this level of support. On silver, I'm looking at maybe 43, 42 level, maybe to hit the 20 MA, and then I would look for buy setups. Aussie CAD, I'm looking to trail my position. My stop loss is still at the initial level, so I'm looking to see if we can break this high. Let me actually set an alert for that. So if we can break the high, I would probably consider moving my stop loss a bit higher and basically trailing it a bit higher, possibly below a swing low, either this one or this one. So that is the game plan. USD CAD, I have a stop loss set, I have a take profit set, so I'm just gonna let this one run. It is positive swaps as well, which you can check in the Edge Finder. I always recommend before executing any single USD CAD Forex trade or any single sort of a trade on, let's say, CFDs, check the spreads or check the swaps. For USD CAD, you actually get positive swaps. So as long as I keep holding this position, every single day I receive positive swaps. So it's extra income, basically. For EuroCAD, I have quite a big stop loss. And I'm looking to possibly trail my stop loss if we do continue going to the upside. Okay, like this. So my opinion of being long or being short the CAD, it's kind of a long-term view. So I don't mind holding these 3 positions for the next, let's say, for the next 2 to 3 months, for the end of 2025, maybe even beginning of 26. I think this is a long-term sort of view. Canada's economy long-term is in a downtrend. Short-term data is bearish as well. So I don't mind holding these positions as long as they want to continue moving in my favor, and as long as I can keep collecting positive swaps on Aussie CAD and on USD CAD. So that being said, let me check the comments. Let me see what you guys are saying. So let's see. JOLTS. Okay, let me check. Hey, Ballout, what's up? Let me check the calendar. Okay, yeah, JOLTS job openings is... Okay, so it'll be in like 23 minutes. Yeah, should be in 23 minutes. We will see what the JOLTS job openings numbers will be. And again, if you're wondering what is the usual effect, it's pretty clear on the Forex Factory calendar. If the actual number is greater than the forecast, that is good for the currency. So I will keep a reminder to check out the JOLTS job openings. So Platinum, Friendseld, hey, what's up? Just Jason, what is up? Okay, gold is better. Neck deep in crypto. Yeah, we can take a look at crypto. Slugmeister, hey, what's up? Gold trends really well and respects the waves. So Ballout is a wave trader. Holding metals is dumb, in my opinion. Aussie strength due to decision to hold rates at 3.6. Yeah. So we did have a cash rate RBA rate statement, and it turns out that basically they decided to hold the rate, and we can check that by going to AUD interest rate graph. And you can see how they now kind of paused with lowering the rate, and that is hawkish. So hawkish means Aussie gains value. So Aussie CAD goes up, Aussie dollar goes up. So that is what the event was. I didn't check the future projections. I'm going to have to do some research on the future projections on that event. In some cases, central banks actually, alongside of the number, so alongside of the cash rate, they release the future projections, which tell you what they believe is going to happen, or what they believe the rate path is, so the interest rate path is for the next 2 to 3 years. And that way you can get a signal, are they dovish, neutral, or hawkish? So it looks like they are hawkish. That is why the big reaction to the upside. Okay, USD Yen, sure, we can take a look at the USD Yen. USD Swiss swap. Well, USD Swiss, we can take a look on the Edge Finder, USD Swiss. It does also depend on your broker. So some brokers have higher swaps, some brokers have lower swaps. And it is very expensive to sell USD Swiss. Okay, it is going to be a very, very expensive trade. Yeah, you'll get great positive swaps if you buy USD Swiss, but if you sell it, you're going to be in for a bad time if you hold the trade for 1, 2, 3 months. So yeah, that could be very problematic. Euro dollar, okay, we'll take a look. Oil is going up. Elafi, hey, what's up? Slugmeister says, I think oil fell because OPEC added some supply increase. Yeah, possibly, could be the case. Could be the case. So oil right around here, that probably was the news with increasing the supply. So yeah, could be the case. I'm not closely following oil, so I'm not 100% sure. But for me, it's just kind of flat in this area. I would rather personally focus on different assets, different currencies, or yeah, basically different instruments. Oil is not my thing. Let's take a look at some of the requests. So we had euro dollar. For the euro dollar, I was in a buy trade. Should be saved on my Oanda data. So I was in a buy setup, which ended up being a small winner on some of my accounts, and some of them I got taken out with this candle. I'm a bit flat. So I'm a bit flat, I'm a bit neutral. The reason is, first, with this strategy at least, I look at the fundamentals. So both the euro and the dollar are kind of strong right now, both short-term and long-term data. So just a refresher, for short-term data, I personally look at the Eco Surprise Meter. This gives me the data, all of the latest readings, right? So US, okay, not the best, but it's okay. Europe, again, short term actually bearish, but long term, I'm looking at the GDP, I'm looking at the unemployment, I'm looking at the CPI trends, and both of these currencies, both economies are doing okay, which means the markets will be flat. The markets will be range bound. That is reflected in the technical analysis as well. I think we have been mostly flat, mostly range bound. We mostly haven't moved up or down. So when buying or selling currency pairs, you need one currency to be strong and you need the other one to be weak. If both currencies are strong or if both currencies are weak, you're not going to get trends. You're going to get flat price action. So euro dollar, not my favorite thing to trade right now. USD Yen was another one on the list. Okay. And if you guys want to get the edge finder, if you want to do this sort of both short-term and long-term analysis, you can use my discount code, which is MARKO. This discount code also works if you want to join the A1 Discord, if you want to get my trade signals, trade analysis, daily market forecasts, fundamental events breakdown, and everything connected to that. If you want to trade with me, you can join the Discord, get the edge finder, and you can get a nice discount with my code. Okay. USD Yen, for me, I'm kind of neutral, kind of neutral. There is an election going on right now in Japan. So Poly Market, this is the one. So the next Japanese prime minister, Poly Market. So the first three contestants are Koizumi, Takaishi, Hayashi. They sound super funny. This guy, the first guy is hawkish. The second contestant, I think that's a chick. I'm not sure. Maybe it's a guy, but he just looks like a girl. Anyway, second one is dovish. So it heavily depends on who will win. Koizumi, hawkish, yen goes up. Takaishi, dovish, yen goes down. So far, Koizumi seems to be winning by a large margin. So he seems to have 71% chance that he will win. At a couple of points, they were pretty close. So the yen is still kind of neutral, still a bit uncertain, in my opinion, until this election happens. And it should close, I believe, on the 4th of October. So that is when you get the results. And also, if you look at the BOJ interest rate graph, you can see that they are on a path to hike interest rates. They're on a path to raise interest rates. And if Koizumi wins, they will continue hiking interest rates. And the yen should essentially go up, meaning USD yen could go to the downside. Okay. Again, personally, I'm being patient. I'm waiting it out. Let's see what the election will, how the election will turn out. For now, we're just flat. We're just range bound in this area right here. I don't see much potential for trends. So let me tell you the key levels. This is the first key level of support, and this is the first key level of resistance. Until we break those levels, I'm not going to be looking for much according to this particular strategy. I did take a buy setup, which was sort of a scalp, shorter term trade, but it was not part of this strategy. Okay, so for now, being patient, let's see a breakout. If I had to give you a bias, long term, it would probably be a bearish one. Okay, it would probably be a bearish one just because of the interest rates, just because the dollar should have lower interest rates in the future, while the yen should have higher interest rates. So just that interest rate divergence, we can take a look at, again, the edge finder and the carry trade scanner, USD JPY. See, base rate, quote rate, divergence. So the divergence, this should get smaller and smaller as the Fed keeps decreasing rates and the Bank of Japan keeps increasing rates. So it'll be very interesting. I don't think USD Yen is the most interesting pair to buy or sell right now. So we covered Euro Dollar, we covered USD Yen. Now it's time for some crypto stuff. What is crypto doing? Nothing much. So crypto is not really moving anywhere significantly. It's just kind of ranging around. I'm not looking for setups. I'm not personally looking for entries. I am being patient on Bitcoin and on Ethereum. Ethereum possibly started to sell off a little bit here, but then it kind of retraced. Was it the break and retest of this lower level? We will see. So what could be the case that this was the initial push, then we retest, and then we continue dropping. Okay, because we had this massive grind to the upside, a correction could happen. So you can draw some fibs. Let me see if I still remember how to draw fibs. I haven't done it in a while. So is it like this? I'm not sure, but I guess the 618 level makes sense that the 618 level is here. So maybe we can pull back to that 618 level right there. That could be a level to target for Ethereum. Again, you also have the story of big US companies, unprofitable US companies, buying Ethereum, artificially inflating their stock price, copying MicroStrategy, copying Saylor, who did this first. He used the reserves from MicroStrategy to buy Bitcoin, thus increasing the share price of the company. But all of these unprofitable US companies that are buying Ethereum have now stopped doing so. Some of them even blew up. So they had a massive sort of Ponzi scheme price action with an explosion and then a drop. I just don't see who is going to be the big buyer to push Ethereum higher right now. I think a correction is more imminent or more probable than a continuation to the upside. For Bitcoin, my question is, why is the NASDAQ ripping so much while Bitcoin is being so flat? I don't like seeing that. Okay, so for me, not the best story for crypto right now. Okay, let's see. US30, DXY, GJ, NU, UJ, US30. Can't stand crypto. Bitcoin is so annoying to trade. Hope it just goes to zero. Stay away from Bitcoin. Okay, by the sentiment in the comments, I actually think that Bitcoin could go up, because when most people are so bearish and starting to hate Bitcoin, that may be the time for Bitcoin to go up. Sorry guys, but that's just how it goes. Like when you see an article in the newspaper, Bitcoin is going to zero. When you see massive skepticism and massive hate for crypto online, usually the best time to buy. So by doing a quick survey on the comment section, I think Bitcoin could go up. Maybe. We will see. We had some requests for indices. So NASDAQ, S&P, US30, Russell. We have the rate cut story that should push markets higher, but also we had bad NFP data, right? So we had some bad NFP data. Let me check. NFP is in a definite downtrend. So definitely moving lower and lower. So it's kind of an opposite sort of effect because jobs market is down and rate cuts are forecasted. Rate cuts are bullish, bad NFP is bearish. That's kind of a mix. So it's not the best fundamental story right now for the indices. For some reason, maybe artificial intelligence, they all seem to be ripping higher like crazy. I'm not the one to go short. I'm not the one looking for sell setups. I'm not a perma bear. I want to buy. But I don't want to buy at these levels. I have pretty much the same view on all of the indices. I don't think some of them are better than others. Well, I do think that NASDAQ is... I do think that the NASDAQ is the best actually because of the impact of artificial intelligence is going to be the biggest on the NASDAQ. But for every single one of them, the best time to buy would be if we get a pullback. So you guys wanted US30 in particular. I think if we go a bit lower to, let's say, this level of support, I think that's nice. I think you get a nice reward to risk. I think if you do get in at this level, you can have a tight stop loss and you can target the highs as a first take profit. You can have a positive reward to risk and you can have a nice structure of this trade. So I like that trade idea. And that's what I would that's what I would do. If I was looking for buy setups, I would wait for the 45.142 level to get hit. And then I would look for buy setups. So that's my US30 forecast. Bollout says, I have always said I hate crypto every day. Okay. I wake up, look in the mirror, and I say, God, I hate crypto. I like investing in Bitcoin and shorting Bitcoin in trading. Well, that is an interesting approach. That is an interesting concept. You basically make money in both directions. So if you can pull off the risk management behind it, you can definitely make some steady profits. Please look into gold. Okay. Gold looks parabolic, looks to be exploding higher, looks extremely bullish. Is it time to short? Absolutely not. I would not be the one who goes short in this market unless you're a scalper, unless you have a crazy good edge. I know there's a couple of traders in the A1 Discord who like to short gold. If it works for them, that is great. For me personally, I'm not the one to call tops. I'm actually the one looking to get in on some buy setups. But also, I'm not the one to buy all-time highs. So I want to get a discount. I want to get a pullback. I want to get a positive reward to risk. Because if I get in here, I have to have a fat stop loss. But if I get in, let's say here, I can have a tighter stop loss and my first take profit can be at the highs with a positive reward to risk. So I think long-term bullish, all of the fundamental data is pointing to a bullish gold, bullish silver. You have rising inflation. Again, note that inflation is above 3% or around 3%. If we go to the CPI, USD, 2.9%, it is above the target. Rate cuts are incoming. Rate cuts are bullish for gold. You also have bad NFP data in the United States, right? Bad NFP prints. That is another bullish case for gold. That creates uncertainty and it makes people invest into safe havens such as gold, such as silver. So I want to take this time to mention the sponsor of today's video, which is going to be DNA Funded. Okay. So if you guys are looking to expand your trading capital, if you want to get a reliable, a reliable prop firm challenge, nothing in trading is safe. So everything in trading is uncertain. You have wins, you have losses, but with probabilities, you can make money. So if you're looking for a good, reliable prop firm, check out DNA Funded. You can use this special discount code only for you guys watching the live streams. The code is A1Live. It gets you 25% off any challenge. I do have a challenge running here, 50K, currently in drawdown. 2 trades are open, negative. So this is for my ChatGPT trading series where I ask ChatGPT every single day to give me trade signals, and then I just put them into this trading challenge account. Okay, so far it's been great. DNA Funded uses the Trade Locker platform, best platform I've used so far. Why do I like it so much? Because it's fast, it's easy, it's simple. I can use it on my phone, and it has a risk calculator automatically built in. So with MetaTrader, if you want to place a 1% risk trade, you have to first go to a calculator online, and it takes time. But with Trade Locker, you can actually put in that you want to get in with 1% risk, and then it automatically calculates the lot size. Okay, so if you guys want to expand your capital, I highly recommend you check out DNA Funded. And if you have any questions, I am available in the A1 Discord. In terms of risk management, if you're a swing trader, what I recommend is 1% for phase 1 and phase 2, and then 0.5% for the funded stage. You can even bump up the risk for phase 1 and phase 2 to get through it as soon as possible. For scalpers, for day traders, lower the risk. Don't risk so much. And I recommend the two-phase program. So if you go to the website, you're going to see it here. Phase 1. Okay. I think it gives you the best terms. It also has static drawdown, not trailing drawdown, which is what you want to see. Getting back to it, let me check the comments. News are out. I don't think the news are out yet. The news is out yet. So we have 40 seconds. So we're going to wait, and I'm going to go through the comments. What's the best trader, scalping or day trading or swing trading? All depends on your personality. In my opinion, the easiest way to start, the easiest way to become a profitable trader is to be a swing trader. Okay, swing trading, by far the most simple, by far the easiest. The stress is low. You can do it with a full-time job. If you're monitoring only the daily chart, it is very easily doable with a full-time job, part-time job, running a business. You just need to check the charts 1, 2, or 3 times per day. There's no rush in putting in trades. You don't have to be super fast. You don't have to have extremely fast execution. And that's the way Nick trades. That's the way Chris Pulver trades. That's the way I trade. And I think I win as well. I'm not sure. But the whole A1 team mostly trades like that. Whoa, okay. So a big beat of the forecast with the JOLTS job openings. DXY, let's see. Should be positive for the dollar. I mean, it's not a huge beat, but it's better than the forecast. So see, actual number greater than forecast is good for currency, number of job openings during the reported month. So that is good. That is good. That maybe even means that less rate cuts are needed. The current reaction is not that big. I would have expected maybe a more bullish reaction. Again, it's not a huge beat. So yeah. Okay, let's see some more comments. GPUSD. Yeah, I'm gonna mention the pound pairs. Just let me go through the comments. Ever since I've been regularly watching A1, I have turned off CNBC or at least barely watched it. What a change. So CNBC, I think most analysts on CNBC don't know what the hell they're talking about. They don't have live money in the markets. they are mostly marketing specialists. Okay, they are there to keep your attention on the screen and not really to give you any significant information. That's just my opinion. I think CNBC is mostly noise, mostly crap, and you're much better off watching the stream right here on Trader Nick's channel. You're going to get a lot more value in a lot less time. Is DNA funded available in all countries or specific ones? It's available in most countries. Okay, United States, Europe, Croatia. I'm from Croatia, and it's available for me. But it is best to check with their support or on their website. ChatGPT is helpful. Well, so far it has had good performance. It has been up plus 23% in 90 days, but lately it has taken on some losses. So I'm not putting in a huge amount of money into the ChatGPT trading experiment. I just have the fund challenge open. But I liked the prior performance. I mean, 23% in 90 days, that's quite high. That is a lot. But so far, I would not put, again, a huge amount of money devoted to ChatGPT signals. I'm just testing it for fun and for content here on YouTube. Yeah, so he's just doing it for content. Yeah, exactly. Okay. CNBC is entertainment, not trading reliable. That is exactly what I believe. Can you check Swiss Yen? Yes. What JOLTS data is helpful for USD, good or bad? Well, here, if you're wondering what is the effect, go to Forex Factory calendar, click this. Usual effect, actual number greater than the forecast is good for the currency, meaning good for the US dollar. This is your cheat sheet, okay? If you don't know fundamentals, this is your cheat sheet. Open up these small boxes and read into it and learn about it. So Elder Ward says the last 5 JOLTS were off, minus 2.7, minus 1.8, plus 6, plus 3, and minus 4%. All of those only made the dollar twitch at most. Okay, so yeah, according to that back test, we're not expecting a huge reaction. So let me check Swiss Yen. We are approaching the end of the stream, so if you guys have any more questions, you're gonna have to put them in tomorrow. I'll be streaming here tomorrow. You can catch me, I think, at 9 a.m. Eastern Standard Time. So we're going to continue with this, with the questions and with the stream. Now for the Swiss Yen, for the daily chart. To be honest, I don't like touching the yen right now. So I'm not looking for any trades. The Swiss, I haven't done a lot of research on. For the yen, I'm waiting for the elections to pass. Again, who will win? Koizumi or Takaishi? Hawkish, dovish. Kind of important. So if I had to give you a bias, the trend is up. We can check on the top setups. JPY. Bullish. Okay, bullish. Yeah, if I had to give you a bias, it would be a bullish one. Am I looking to buy? No. I don't have enough information according to my trading style to go ahead and execute the trade. I think there's better opportunities out there. We talked about GBP/USD. I'm looking at the pound pairs. I'm very bearish on the pound. The two biggest fiscal sinners right now is first the CAD. I hate the CAD. I'm shorting the hell out of the CAD. And the second one is the pound. So I want to sell GBP/USD. I want to buy Euro GBP. What I'm looking for a key breakout of some specific technical levels. For GBP/USD, this is it, this level of support. I'm looking for a break of this level of support, and then I would be looking for nice sell setups. Okay. For Euro GBP, I'm looking for a breakout higher out of this level of resistance. So you can see I have my alert set. Until we break out of this, I won't look for anything because I don't want to get stuck in buy positions here. I don't want to pay massive negative swaps. So let me first wait for a breakout, confirmed breakout to the upside, and then I would be interested. So a couple of last minute questions. Let's check it out. What prompt language do you use to ask ChatGPT for trade signals? There's more information on my channel. I already made 2 videos in the series, and I explain everything in there. I don't want to take up too much time here. So go to my YouTube channel. My YouTube channel is Marcos Trading Journey. Okay. So Marcos Trading Journey. You have it in the chat as well. So thank you, James. And search up ChatGPT on my channel. You're going to find it. All of the information is there. Do you stick to specific pairs, major Forex pairs, and the S&P 500? You have my whole trade journal in those videos. So far, ChatGPT is up, I think, plus 21% in the last 100 days. I think now we have passed 100 days. With minimal drawdown. Maximum drawdown was like 3 or 4%. JOLTS being red on the Forex Factory is a little questionable, sort of like consumer sentiment and others. So maybe they're not as important as the markets think, or as Forex Factory thinks. Maybe they are a bit less important. They are red, so we're gonna cover them, and they are a bit higher than the forecast. Looks like the reaction has not been massive. The reaction so far has been, I would say, negative, even a bit negative. So yeah. What does JOLTS do to the indices NASDAQ? Well, I think it first has a massive reaction on the dollar, but it doesn't have a huge reaction on the indices. That's at least what I'm seeing right now. Again, I haven't done massive backtesting. You would need to go through a lot of data to know that, to notice this, to notice any movement. But looks like the movements are minimal, so they're not that big. That's about it. The theme is still to sell the CAD, sell the pound, buy the NASDAQ, buy gold, buy silver, and that's what I'm looking to do. So thank you guys very much for watching. Check out DNA Funded. You can get 25% off with our discount code A1Live, and I will see you tomorrow. Goodbye.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.